I wanted to do a chart lesson on the spike in channel that happened today, this spike right here in this channel that happened today, and hopefully try and explain it in a way that makes it easy for people to understand. So I had kind of profiled this section of the chart, and I saw that this whole leg down was missing from the chart, and that there wasn't really any volume between 70 and, like I was kind of saying, it was 82 up here, all the way to the top, where the gap was. And I was thinking, hey, they're gonna basically, once they get into that range, they're gonna be able to move this real fast, and and then once it got up to the top area or whatever, they would just kind of grind through. There's actually a lot more kind of volume back here on the chart that I thought that they would have to grind through in order to kind of get through that area. And in my morning video, I had talked about that I was going to expect to see a spike in channel, and wanted to try and give you the psychology behind this spike in channel right here. So if we were to kind of back up, we've got 1, 2, 3 days. We've got just this little area right here, which was the last of the price action. And when they basically brought it up over this level, which was the closest price action that they had, it was kind of like a signal to the rest of the market, hey, game on. And they basically spiked it up. They sold it back down, sold the contracts that they sold, and then they did another spike. And when it didn't stop, because there's no recent price action in here, people were on the wrong side of the market. And generally, if you would have basically sold or gone short down here or gone short right here, one of the tricks is to actually add on to your position where you think the next level of resistance is going to be, right? So you double your position in order to bring your cost basis in half. And when you get an extended move like this one or like this one, what happens is you get basically a double position, and all of a sudden you're losing even more. And when it finally gets to resistance, it doesn't sell. And the reason it doesn't sell is because the people that are short keep on adding to their positions, right? They need to keep on bringing their cost basis up in order to get out of the market without a loss. And so they're selling heavily into it, and every little tiny dip where they can kind of get out of the market, almost break even, or with a small loss, they basically are reversing their orders and buying it. And that's why you get this sideways movement right here. So think about it. I want out of my position in order to get my cost basis up here close enough where I might have a chance to get out with some kind of profit. I've got to sell like 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 contracts, right? I got to sell a whole bunch of contracts in order to bring my cost basis up. And so I'm selling it, and it's going down just a little bit, and I finally get to a level where I become break even or close to flat. And so I go ahead and hit the buy button, to basically get out of my position. And that that adds fuel to the fire. And so you get this sideways action right here where people are trying to get out, and they're basically holding the market up as they're trying to get out because they're selling and then immediately turning around as soon as it gets low enough and buying it. And that happens after these big moves. This one was a pretty big move, but it was so early in the morning that you probably, this was probably very thin as far as the number of people that were in. But you can see that they sold, and you didn't get like real good distinct legs back or whatever. But after the market opened here, it was like 7:30 right here, took off, and people were on the wrong side right here, right? And there was no resistance, and they were getting killed, and they were basically putting more contracts on. My dog's making noise, sorry. More contracts on, and then immediately buying it. And basically this bar out of here, this was the panic, right? All those people that sold and was hoping that it would come back a little bit farther, they gave up right there, and they blew out of their position. So they basically blew out of their position right at that point. And you can see, basically at that point, this is where you start to get the channel, and you get the tight channel because it never comes back. It just keeps on going up and up, and you get this grind. And this is the worst. This is the deadliest piece to try and short into, because again, they get up to a resistance level, they start shorting again, right, trying to bring their cost basis up, and the minute that they get to somewhere that it might be kind of break even or something like that, they buy back in. Boom, come up to the resistance level, everybody's selling, dun, 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 boom. And you get this move where these guys are just trapped all day long, and it's tight. All the candles are like overlapping, and if you can't understand this, you're the guy that keeps on trying to short this market, and you're just losing and losing and losing and losing, because basically the sellers have to run out of fuel, because they're basically fueling this market with their shorts. It's a big giant short squeeze, and that's why you get this spike and channel. It can't stop, because it never pulls back right. Never lets the shorts out, and they keep on shorting and shorting and building bigger and bigger positions, and then they have to buy and buy, and they're losing their pants, but they're driving this market up, and if you were on the right side of the market, you're enjoying yourself. But they're having the worst day of their lives trying to short into that, and so that's why you get that spike in channel. I wanted to try and describe that, and you can see it a little bit better maybe on the smaller time frame. People were trying to sell, killed again, trying to sell. They're trying to sell at every resistance spot. Doesn't go down, they're trapped. They sell more, they're trapped. Sell more, they're trapped. Back up, they try and sell. Look at they're like trying to get out. And you got this big old spike right here. And it's not that new people are like, hey, let's buy the top of the market. This is a great place to get long right here, into the resistance. No, it's that these people are trapped. They're fueling it. And when it can't pull back, it's their own demise. If they could just not buy, it would probably gradually drift down, but they're fueling themselves. There's so many people that are caught on the wrong side when you get this spike. And so you have to look for the channel after the big spike like that. So this is twice the range, right? So we always look for 100% range extension on our range. So from a high to a low swing, you kind of look for 100% range extension, and this thing gets up over it, and nobody can get out, so it's gone too far, and they're trapped. So I think it actually looks better, probably with this little swing right here. I mean, it never even came down and gave you the full swing on the other side. I mean, you got pretty much a measured move on as far as the leg down, but you never quite got it. But I hope that will help you understand, low. So nobody was looking over here to the left. There's just air. There's nothing here. And I knew that this place over here had nothing in it. It was air too, right? And so in the pre-market video, I called for a spike in channel, and I knew that it was going to rip. And then once it got up into the resistance area, it was just going to grind its way higher until basically they wore themselves out. So, and that's why you get these extended moves, right? It's not that everybody really wants to buy into the high of the market. They're forced to be forced out of their positions. But I hope that gives you some of the psychology behind the spike in channel, and what kind of to look for, and not to be the guy that's trying to sell into it.